trading is very difficult, but once you figure out that one strategy that really sticks with you, it's game over from there. When I first started trading, I had absolutely no idea where to turn. I kept hopping from one strategy to another, trying to figure out what works best for me. But what I realized is that I need to find one strategy that works and stick with it from there. You don't need 50 different confluences to enter a trade. The system that I use is very simple and requires only 3 easy steps, and that's it. If you spend the time and actually work really hard, I can guarantee you that this strategy will make you profitable in the future. But it's not just a strategy. It requires a lot of hard work and a lot of grit to get this. All right, so like I was just talking about, all you need is 3 easy steps to figure out what this trade is. Now, let's look at it like this. Let's just make a little drawing. I'm gonna delete this. Let's make it look like a little chart drawing. All right, so pretend this is pre-market right here. This is exactly what London session did. And all you need to do is figure out, obviously mark out your market open. Let's just say that red line is market open. All right, so now what you're going to do is figuring out where your bias is and where your draw on liquidity is. So let's just say, for example, the bias is bearish for today. All right, right now, what we want to see is a sweep of London session high. So pretend that this is London session high. You want to see price move back up, sweep that high, and then find execution to the downside. Now, this is exactly what I do almost every single day. I look for that sweep of London session high. So let's mark out that high right here. So this is the high. Let's mark out London high. London high. All right, and I want to see price sweep that high to then target these lows right here, or even lower liquidity from previous days or anything like that. So let's see what price is going to do. We make that move up, boom, sweep that London session high, and now we're going to want to see either 2 things. So either a inverse fair value gap or a fair value gap retracement, then taking that short and targeting that London session low. So let's just say, for example, we have a fair value gap. We retrace back up into that fair value gap, and then boom, target that low right there. Let's move this over. And then let's pretend we take the shorts based off of that fair value gap retracement. My stop loss will be above the highs, and then my profit target will be that London session low. Just like that. It's very simple. This strategy pretty much pops up almost every single day. Let's mark out this is a London low. Boom. Just like that, London session low right here. That's it. That's all it is. Now, this could also go for the same way. So let's just pretend this is a inverse fair value gap. We sweep that high, make a move down, inversing that fair value gap. So pretend this is a fair value gap. We inverse this. We close below that fair value gap, and then boom, I take shorts right here. Stop loss a little bit above that inverse fair value gap or above that high, and then boom. So let me put this on the actual chart so you know exactly how to spot this out. This is exactly what I'm talking about. So we see that London session high, we're making a move up, and the draw on liquidity is somewhere below these lows right here, where there is an imbalance right here. So if you look on a higher time frame, there's an imbalance right here below these lows. So this is like an hourly fair value gap, or you could even target these Asia session lows. Now, this is, oops, I don't know what just happened. Now, this is exactly what I'm looking for. We see that price made a move up, sweeping above that London session high, which is already that liquidity point. That's the liquidity point that's going to make that reversal for us. Now what I want to see is an inverse fair value gap or a fair value gap retracement. What do I see right here? We got a fair value gap that we inversed. We closed below this fair value gap, and I am taking shorts as soon as we close below. Stop loss is a little bit above that inverse fair value gap, so just like that. And I am now targeting that either this internal low, or I can target all the way down here. All right. Now, realistically, personally, I'm not targeting this entire move because the whole point of trading is to catch just a piece of that pie. Now, if you're a trader that wants to catch the entire thing, that's not a problem at all. You could do that with this strategy. Obviously, you got to implement some of your own rules and stuff like that into this, but I keep it simple. I don't target too much. I don't get too greedy. I don't over risk. It's very simple. I target the opposing liquidity. So whatever the next liquidity point is, that's what I'm targeting. So personally, let's just go to replay mode so I can change the time frame on this. Let's just go onto the 15-minute time frame. All right, cool. So below this low, we can see that we have a 15-minute fair value gap right here. Now, what can happen is that we can sweep this internal low and then also reverse out of this fair value gap. So that to me is saying, hey, this is a good profit target spot to close my position, because there's a chance that with these two confluences, with this internal sweep and this fair value gap, we could 100% reverse from there. All right. So This is usually where I am targeting. So pretend like this internal low right here. That's what I'm targeting right there. Now, another thing I like to implement as well is going break even. Now, I love going break even on trades because if I see that my trade is moving, I want to move my stop loss to break even. The reason why you'd want to go break even is because if you're already in profits, why would you want to see price reverse and then stop you out completely? Let's just say, for example, like, we're all the way down here and I don't move my stop loss to break even. Why would I move all this just to lose it all? There's no point in me doing that. So what I usually do is anytime I see a significant move down, usually when price is at like a 1-to-1 RR or like a 1 to 0.5. So like, let's just say, for example, below this low, and then that's also 1 to 0.5, 1 to 1.5, which is a perfect spot where I usually tell people to go break even. So below this low, this is my break even spot right here. That's my break even right there. BE. Cool. And now I'm completely risk-free on this trade. I don't care what happens to this. It's either my stop loss gets hit, which is at break even, so I lose nothing, or my full take profit gets hit, which is that 15-minute fair value gap, which is also that internal low that we have right around here. Now, personally, this is the trade I'm taking. And obviously, we could tell that price continued to go lower and lower and lower, targeting that main draw on liquidity, which is that Asia session low, which was also London session low. We could see that Asia session was just like a little bit, about like 0.5 of a point below that London, yeah, 1 point below that London session low. So if you really wanted to, you could 100% target that full move down, which is insane. This is almost 200 point trade. Now, like I said, I don't target this full thing. You can, without a doubt. It's just I don't like staying in trades for, over almost an hour. There's personally no point for me to do that. Now, this type of setup pops up almost every single day. Let me find you guys another setup just like this. All right, so this is another setup that I found that I actually took a trade off of. So it's a very simple thing, and it doesn't need to be the London session low or London session high. It doesn't need to be a very main drawn liquidity or any sort of liquidity. It could be an internal liquidity. Now, for example, we could see that we made a very nice move up. Now, there's a chance that we might be able to sweep this low, but personally, anytime I see an inverse fair value gap and we see any sort of internal or external sweep of liquidity, I'm taking it. Now, we can see that we have this internal sweep right here. We swept that internal liquidity right here. And now what we could do is we find this inverse fair value gap and boom, we take the longs, have your stop loss somewhere below the inverse fair value gap, so somewhere below this area. I usually like targeting the open or close of the candle that made that that inverse, and we target the opposing liquidity. So like we just talked about, we could target this London session high. There's this internal high right here that we have. For example, personally, I just like targeting the opposing liquidity. So whatever the opposite liquidity is of what we just took. Boom, this is 76 points. If you were to take this with 5 contracts on MNQ, that's $760. Why would you not want to take something like this? This is perfect. Now, here's another way I would go break even on this. So for example, we took this long right when we close on that candle. I'm going break even right above this high. This is a perfect high to go break even at. Boom, just like that. That's your break even point. So now, let's just say, for example, price wants to reverse. I don't lose anything. I'm already chilling on the day. Even if my stop loss gets hit, I don't lose anything. I'm still risk-free at that point. So I don't care what happens to this trade. I am completely risk-free on this. All right. So like we just talked about, you could take it as high as you want. Obviously be meaningful. Don't be too. Don't get greedy with this. But this just shows that this works. Now you could also take it the opposite direction as well. So for example, let's go on replay mode, start new, let's go here. Now, let's go, you could take this in the opposite direction. So let's just say, for example, let's go on the 15-minute time frame. We could see that we have this as an imbalance right here. I'm going to be targeting, like I was just talking about, I'm targeting imbalances and highs, okay? So this is a perfect example. So let's just say hourly, boom. This is an hour fair value gap right here. I'm targeting that high. let's go on the lower time frame so we could put an exact point of where we want to target. So that's that hour, that's that 15 minute that we're just targeting. So we can get rid of the hourly. Boom, 15 minute. And now what I want to see is an inverse somewhere, or is some sort of fair value gap that will take me to the downside. So let's just say, for example, this fair value gap right here, we can see that we respected it. We closed below it, but we never got a very nice push down. So I wouldn't take this, all right? So even though this might be somewhat good, let's just say, for example, you're literally right here, and you're like, all right, cool, we're inversing this. What's going to happen is you're going to get stopped out. So sometimes when you see manipulation, there's a chance that it wants to manipulate even more. Now, there's a lot of people that would take this right here. And I know there were a couple people within my Discord that took this, but then they got stopped out completely. So now this is how you avoid it. You stay patient and you wait. All right. Well, let's pause this. So what you do is you look at a higher time frame. So since we have a higher time frame rejection point, so we can see that we got the hourly, we got that 15-minute fair value gap that's going to reject us. You want to see something on a higher time frame. You don't just want to take something that's on, 1 minute time frame. So let's look at the 5 minute. So this is where I'm looking at. We got this. Let's take a look at the 3 minute. Let's look at a little bit of higher time frame. Okay. So we can see that there's no real good inverse fair value gaps. However, once we see here, we move down just a little bit. We got that inverse right here. Once we close below, we look at the 1 minute time frame where we close. This is a perfect prime example. So let's just say, for example, that's my entry point, stop loss, a little bit above that inverse fair value gap, and then you could target, this internal low, or even that market open low. All right, let's see what happens with this. All right, so at this point, I'd be break even. Okay, boom, there you go. All right, so at this point, right around this low right here, I'm going break even on this. So we can see that we let price do its thing. We, chopped around for a little bit. It took a little bit of time for it to actually get some movement. But the reason why I don't like going break even so quickly, because I see a lot of traders, their mistake is that they go break even very, very early on. So let's just say, for example, they go break even at this low right here. What happens is you get stopped out immediately, and then you miss out on this whole trade right here. The reason why I wait so long for price for me to go break even is because I want price to do its thing. I know that there's going to be manipulation. I know that it's going to chop around. So why would I go break even so early, knowing the fact that it's going to potentially stop me out? All right. So I like to wait for price to do its thing and find some sort of low that's already below that a certain point that I know it's not going to reverse instantly. Like in this case, for example, like we just talked about, this low, this fair value gap right here. That's only like, what, maybe, okay, that's 25 points. That's not bad, but personally, I want to wait. I want to see price move more for then to me move my stop loss to break even. All right, so this is a perfect trade right here. Go break even at this low right here. So no matter what happens past this point, I'm risk-free on this trade. I could stop out in my break even and I don't care. All right, so personally, this is not really necessarily a trade I would take because, like I said, I like to take trades right when market opens or around the market open time, be in and out, and I don't have to touch the charts anymore for the rest of the day. Now, this trade was an hour and 30 minutes. I'm not sitting in that the whole time and watching this chop around. All right, personally, I want to be in and out. I don't want to be looking at trades for hours on end. There's literally no reason for me to do that. Now, let's find another trade entry like this. All right, so we're back for another trade entry with my model. So as you can see right here, we made a move up, but we never made any significant moves down. As you can see, there was one little spot that we saw that we could have taken shorts off of, but this is exactly why I would not have taken this. So we see we got the inverse, we swept that London session high, and we also have an internal liquidity sweep right here. A lot of people would have most likely want to go short, but the reason why I didn't is because we never saw a closure below that inverse fair value gap, so I waited. So this completely was like, this is telling me, all right, I'm not taking this no matter what. So I didn't actually take this trade because I got off a little bit too early, and we could see, so if we go on a higher time frame, let's take a look what we got before this. So we could see that we actually made a move up And then we can see that, let's go on an hourly time frame. We got this beautiful 1 hour fair value gap right here, which is a perfect rejection area. So let's go back on the 1 minute time frame. We could see we hit that equilibrium of that 1 minute inverse, that 1 hour fair value gap. All right, so that's already telling me, cool, this is going to be beautiful shorts. All right, so keep that in mind. I'm going to delete this so we're not looking at too many things. So this is already telling me that I'm going to most likely want to look for shorts. Now, what do we see? We see a very small but very powerful 1 minute inverse fair value gap. If we close below this, I'm taking shorts. And sure enough, we close right below that inverse fair value gap. My stop loss is a little bit above this high, just like, just within this area. And you could target this entire fucking thing, just like we were just talking about. You could target 178 points. If you take that with 5 contracts, that's $1,780. If you do that with 5 accounts, do the math. Figure out how much money you can make with that. All right? This is a perfect example, prime example of this strategy working. Obviously, it's not going to be all the time where it's going to be right at market open, within 15 minutes of market opening, but this is a perfect setup that works. All right? Now, personally, I didn't take this because I got off just a little bit too early. If I stayed on maybe an extra 5 minutes, I definitely would have taken this. My rule is if I don't see a setup before 9:15 or a little bit after, after 9:15, I don't take anything. I'm in Chicago, so 9:15, market opens at 8:30 here. So if you're New York time, Eastern Standard Time, it's going to be 10:15. If I don't see anything before 10:15, I get off because there's no reason for me to trade. It's just telling me that it's a non-probable day. The reason why it took so long for this trade to happen is because yesterday was a no news Monday, and then today is actually a bank holiday, which usually days before bank holidays aren't the best because there's just no volume that's going to be pushed into the market to pump it. All right, so in this example, this is a perfect example right here. If I was actually taking this, all I would have done is potentially just target this market open low, because market opens, any sort of points that are from market open is very high in liquidity. There's always a bunch of liquidity sitting below this low. Even if you want to target just an extra couple points right here, this low right here, or this major internal low right here, that's a beautiful, beautiful entry. That's 127 points right there. Or not entry, that's a good take profit spot. So if you really practice this, you could 100% make a lot of money off of this. And here's another example here that I also saw. We swept London session low right here. So we see that this is London session low. From this point right here, made a very nice move up. And if you look at the 5 minute time frame, we can see that we have a 5 minute fair value gap right here. Boom, just like this. We retrace back into that fair value gap. You could take longs from this right here. Oops. Take longs from this right here. Stop loss somewhere within this area. Target that London session high. Or you could even target this area right here. That's $680 with 5 contracts right there. Let's just say you target that high right there. What do we do? Bang! Just like that, bro. It's so simple. It's a very, very simple thing. You don't need a lot to this. All it is, it's three easy steps. I don't know why I said 3. 3 easy steps. Liquidity sweep, either internal or external. Draw on liquidity and an entry point. It could be an inverse fair value gap or a fair value gap. I keep it very, very simple. All I look for is an inverse fair value gap or a fair value gap. I don't look for CISDs. I don't look for, breaker blocks, breaker structure. I don't look at any of that stuff. I look at an inverse fair value gap and a fair value gap. That's it. That's all it is. And just like that, it's that easy. It's 3 easy steps like I was just talking about. Find your draw on liquidity. Find some sort of internal or external liquidity sweep. Find the execution. All right. I use a very simple model. It brings me in money every single day. A lot of people trade like this within my Discord. They use the same model that I do. I wouldn't even call it my model. It's literally just a simple thing. All right. It's that easy. Usually on average, I have about 70 to 75% win rate on this. I'll pop it up on the screen right here. It's so easy. All right. It brings me in a lot of money every single day, and you could do the same thing. All right. I hope you guys have a good rest of your day. Peace out.